So, Trump and China reached a trade agreement yesterday. Tariffs have eased, tensions have lowered. And what does that exactly mean for the Forex market? Well, it appears that we are moving into a risk on market. What does that mean? It means that we're probably going to see the US dollar weaken. In this type of environment, we see those safe haven currencies, the US dollar, the Japanese yen, the Swiss franc, and even gold. We see those assets lose strength. And instead, we see investors start to put their money into riskier assets like the Canadian dollar, like the Australian dollar, like the New Zealand dollar, and even in crypto. So if you're watching those charts, right, I'm a big on technical analysis, but we also have to pay attention to what's going on globally. So the sentiment has shifted. So instead of feeling scared, investors probably feel a little bit more comfortable taking their money, putting them into those riskier assets in order to see more growth. So, my advice to you as a trader, in order to be well rounded, we have to look at all scenarios. We can't just depend on the technicals. We have to pay attention to those fundamentals too. So, if you're watching the charts for those USD quote pairs, this is your cue to pay attention. What's your bias on Euro USD, on AUD USD, and on NZD USD? And I guarantee you, if you've been paying attention, you got a lot of pips to catch this week.